U.S. President Donald Trump won his way back to the White House in large part because of voters' concerns over the economy. He promised to bring down the price that people pay for things like food and fuel. He also wanted interest rates to be cut to boost the economy. But the Federal Reserve has been reluctant to cut interest rates, in part because of concerns over the effects of Trump's tariffs on inflation. Now they're cutting rates by 0.25% because of a weak labor market.
Ordinarily, when the labor market is weak, inflation is low. And when the labor market is really strong, that's when you got to be careful about inflation. So we have a situation where we have two-sided risk. And that means there's no risk-free path. And so it's quite a difficult situation for policymakers.
Officially, the unemployment rate is still somewhat low, but experts are worried about some of the statistics that they're seeing. For example, of all the unemployed people in America right now, a quarter of them, 1 out of every 4, have been out of work for more than 6 months. Historically, that's an indication the economy could be headed for trouble. President Trump has taken unprecedented steps to influence the Federal Reserve, an independent body. He was able to confirm a White House employee, Stephen Myron, to an open seat. Myron was the only one who voted for a bigger rate cut. But even in the minority, experts see cause for concern.
Trump really has eyes and ears now into these discussions. That one vote isn't going to move the needle. But now that Trump knows everything that they're talking about, the game has changed.
The economy is changing too. Historically, the Federal Reserve faces either high inflation or a lagging job market. Now it's trying to fight both. That's raising concerns about stagflation, something that the U.S. hasn't seen in 4 decades. Patty Culhane, Al Jazeera, Washington.
Don't miss out. Get the full picture. Subscribe to Al Jazeera for reliable news, expert insight. Like, share, stay ahead.